I would consider everyone here friends of the firm, and I really appreciate you taking time out of your day to share your knowledge and wisdom. One of the things that I think is cool about this group is we've got different sized banks at the table, so I think you'll get different perspectives as I ask them some probing questions into some of their daily struggles and challenges and some of the things they've learned over the years. So, without too much introduction, I wanted to just kind of start soft, and really I'll start with Michelle and then work on down the table. But how did you get involved in agricultural banking, and what drew you to it?
My family farmed at a small scale. We lived in an ag community, and I knew I wanted to live at home. And when I graduated from Purdue, I decided that after enjoying Dr. Downey's agri-selling class at Purdue, that maybe that would be the best fit for me, would be ag lending. So I pursued ag lending that way.
And so you've been involved with that for
straight out of college,
straight right from the beginning, right?
Yeah.
Okay, yeah. Cool. Jeremy?
I came from a different background. I had a lot of commercial industry stuff, multiple different careers. Got into banking a little bit later in my career. A lot of restaurant industry, manufacturing. Had a job, had an opportunity to come back to the community locally, start my job here. Started as a commercial lender and worked my way through the bank. I had since bought a small farm, so I do have some acreage that I custom farm now. So always been in the agricultural industry. That's just what we have in our community. So just happy to get into banking, and been around for 17 years and don't really plan on changing careers again. So
nice. So it sounds like you've got a lot of different experiences that kind of give you perspective outside of ag as well.
Correct.
Okay. Nandy, how'd you get involved with ag lending?
I grew up on a dairy farm. So as a kid, I was always around animals, tractors, whatnot. So went to Purdue University and knew I didn't really want to per se be a farmer after that experience as a kid. So dairy farming is a little bit different lifestyle than your crop farmer. But really enjoyed it. An internship with a financial institution, learned a little bit about banking, and realized that's a lot of interaction with people. I like numbers, just kind of helping them solve their problems. So worked with mainly in Lafayette with some commercial side, kind of like Jeremy, more on the commercial side, but really over the last 5 years transitioned to do a little bit more ag. So just getting a feel, and work with Alliance Bank, and we're coming to those rural communities where ag is really important to the economy.
Yeah, it's kind of hard to live where we live and not have any contact with ag. And so, one of the things that we struggle with our clients, and I know just from working with all of you from time to time, is books and records, making sure that we get quality information, not just to you, but in order to prepare your tax returns. What kind of talk a little bit, and again, why don't I go, I'll just alternate first and we'll just round the table, but talk a little bit about the challenges of when clients maybe don't have solid books and records, or they don't have what you need. And then, we talked a little bit before we went live about how that maybe even becomes more challenging when you have multiple entities. Talk a little bit about some advice you might give and some challenges from your end and how they can make their lives easier in some of those areas.
I guess I'll go ahead and start this one. I guess the big thing on that, Jeff, is, we look at a balance sheet and we have tax returns. Those are the two main things we deal with. I mean, cash flow statements as well. With crop farmers, we don't do a lot of livestock. I know both these other banks probably have more livestock operations than the Bank of Wolcott. We're mostly row crop farmers that get income once a year, and they have, one time through the year. So the biggest challenge we have is you'll have 3 different crop years on one tax return. And if they don't have clean records, you have a hard time determining what the profit loss is for each year. So we can do averages. People that have the operations are not growing or not changing, that's not as big of an issue. But if you are adding acres, reducing acres, changing operations, the tax return only shows you about 20 to 25% of the picture. So you need a little more of that accrual one year profit loss scenario from the banker's standpoint. And I can speak a little bit different from a board of directors and a loan committee. If you don't have the one-on-one relationship and you're looking at it just from a numbers standpoint, then it becomes really difficult if there's not a clean track record as to to where that goes.
Now, what kind of sizes of farmers are you guys working at Bank of Wolcott?
We go up to $4 or $5 million total, but most of our on top of between real estate and lines of credit, for the most part, our average customer is probably more of a $1.5 to $2 million relationship.
Are you looking at more like 1,000 to 2,000 acres, or
yeah, from 1,500 to about 3,000. Once you get to 4,000 or 5,000 acres, those are probably bigger than we can handle.
Okay.
And we probably have more, as the smallest bank of the panel. We probably have more what we would call a hobby farmer. 600 to 800 acres and a part-time or off-farm income scenario. So our normal business is, husband, wife, maybe a family member, but usually not a lot of hired people in the operations that we deal with.
Okay. Andy, do you want to expound on that a little bit and talk a little bit about some of the challenges that you face and some of your recommendations?
Yeah, Jeff, I think Jeremy made a good point on the balance sheet. So we like to kind of train our customers, get a 12/31 balance sheet every year. So just so it's consistent, you have that. I think you made a really good point on this tax return could have a prepay for this year, going to next year. You have crops that could be carried over. Just all this tax returns, as a CPA, everything's kind of intermingled. Half the time, we'll ask the customer, and the customer like, talk to my CPA. We know it's going to structure your year. So I think that real importance is consistency of knowing where they're at 12/31. It gives a good point to kind of look to what were my receivables last year and compare them year over year. So I think just the importance of just having accurate books and not just saying, I think I'm around this number. Mm-hmm. So we want to keep it consistent because also the balance sheet, making sure you keep them separate from your personal. We see that sometimes where personal assets are intermingled with the farm. And when we look at accruals or differences, sometimes we got to start looking through checking account history, trying to match up. What was this $5,000 check? Oh, that was for my kid's 4-H project, but really it was they went to the farm. So really just making sure you're kind of keeping that separation of farm activity with personal activity on a lot of the farmers we see.
Okay. Michelle, do you want to expound on any of that? What are your experiences maybe as the probably dealing at the larger bank at the table? Do you seem to have maybe more sophisticated clients, or do you have some of the same challenges?
You see a wide range. It varies immensely. I have clients as small as 100 acres, and I have clients in excess of 5,000 acres. Loan range varies widely. I wouldn't say, I don't know what our average is, to be honest, but the thing that I find is if you have someone who comes in and they don't know what their information means, or they don't have a good grasp on their numbers, then they perhaps, like I'm looking at one right now, and there's lease versus loan. Well, if your lease is getting written off on your taxes, you're not telling me it's a lease, and I'm counting it as a loan payment, but it's already been written off, then you're double hitting yourself, which is just going to lead us to make a decision that you're not going to like. So the best thing to be is, be on top of your information, know what's what, and if you don't know what's what, have somebody within your organization that knows what's what, so that they can help you get that list together in a timely fashion. The other thing that for records, I want to make a point. Obviously, if you're a busy lender and you have a large clientele and you're coming in and wanting to start doing business with us, frankly, if it's something that's extremely messy, it's going to be more difficult and timely for you to get an answer. And so if you're needing to move quickly on a project, it's just going to cost you time if you don't have your stuff already organized. The other thing I was going to point out is good books that are complicated are easy to explain. I can explain those to the people that are needing to make the decision. Easy books that are unorganized are very difficult to explain. So you are helping yourself if you can provide good records to the bank and make our job easier to help you. So,
and one of the things that we do here, I guess I want to say it's more of a program or process, is we really encourage our clients to either have someone competent on their side that can manage the financial side of the business. Usually at the size of farmers that we work with, that typically gets defaulted to the spouse or the wife, depending upon the situation. But if not, then what we really encourage our clients to do is to allow us to help them at some level. And a lot of times that starts with either, a little bit of help, like, hey, look at my stuff once a year, make sure it's okay, or maybe monthly, and then all the way to the end where we do it all for them. So one of the things that I wanted to follow up with that comment is tell me what a difference it makes, and I'll start with you, Andy, when a client comes in and they've got solid books and records and they know what their numbers are and they can pretty much come to you with a solid understanding of what their future looks like.
I think that's the key what you said, knowing what the future looks like. So even from a cash flow projection, that's something that some of the smaller farmers might not do. We encourage all our farmers to do that. So you can kind of see when's your outputs going in, when your inputs going in, what should your line balance be? Because I think some of the farmers don't do that, get to maybe July, they come back to the bank, I'm sure you guys have had it, or I need to increase my line. Well, you didn't tell us about this expense. You didn't realize that. So a lot of the expenses you kind of project what they're going to be throughout the year. And kind of get more of a plan. And then also mention know where they're headed, but also know where they've been. So what we like to do with our clients too is we show them a 5-year trend of what their records look like. They can kind of see, is this normal for what I'm projecting? Is this what it should be? Or last year was really high. Why was that high? So instead of looking at year by year, they can also see a trend that's going on as well and helps them forecast and then hopefully get a situation where their cash flow works, but also they're not coming back to the bank in the middle of the year saying, I need a little more money.
Okay. So, Michelle, one of the things that we've started to do with our clients is to really encourage them to either, like what Andy said, do a cash forecast or a projection, or have us assist and help them with that. Tell me a little bit of what that does for you as the banker when you've got that information pre-prepared and known before you go to do a renewal or even an initial credit.
Depending on the size of the credit, often cash flows are required. So when you're farming $10,000 to $15,000 or 10,000 to 15,000 acres, and you can't provide a cash flow on a monthly basis,
Right.
You're probably not someone we want to do business with. So you need to have a handle on your numbers before we have a handle on them. And when you come in and know what you need, and maybe we have to tweak a few things or suggest a few things, but it helps provide a better overall picture and gets everybody off on the right foot, because then we know that you're competent enough to prepare and at least know to ask the right questions. If you need help with the cash flow, we're fine with that.
Mm-hmm.
But know that you need to do one and that it would be best for your operation. In my opinion, there used to be, and I don't think there's very many anymore, but there used to be a lot of smaller banks in particular that didn't require cash flows. If you're not doing a cash flow, a month by month cash flow, and you're a larger operation, you're probably costing yourself money because you don't know what your monthly borrowing max is. So you can't peg things correctly. You might end up having to leave something on borrower credit because you didn't make your line big enough. Sometimes those are cheaper deals, unfortunately for us, but sometimes they're not.
Sure.
So, I mean, you gotta, if you don't know, you can't prepare properly. So
What the one thing with the cash forecast that reminds me of is I always have clients, especially a new client, say, my previous CPA, they would always get stuff done at the last minute, and then I'd find out what my tax liability was 2 or 3 days, or maybe even the day it was due. And I'm like, okay, so you don't like surprises. I'm pretty sure that these bankers here don't like surprises either. So when you can forecast your cash and not give them the surprises, it gives them, I would say, some more confidence. And Jeremy, if you want to expound on that a little bit, I don't mean to steal anybody's thunder, but
No.
That's a big motto around here is no surprises.
Yeah, surprises don't do well with the lender. They don't do well with loan committees, and they don't do well with the board. For the most part, we talk about relationships. I think everybody here has relationships, and we know farming is cyclical. You have good years, you have bad years, and we want to be with clients through both. But if you can't project when the good years and bad years are coming, nobody has the crystal ball on the market forecast or the yields. So we understand that. But if all of a sudden you have some term payments, say they have 3 pieces of equipment that this is the last year of payment and they're not going to replace it for the next 4 years, that helps your cash flow so you start looking forward. If you don't have an idea of what that is, and then you have a surprise, and then you're coming in and you're 20% under budget or something, or over budget, then all of a sudden that surprise is scary. Sometimes we can plan for them with markets, and it's better to just strengthen the relationship as opposed to all of a sudden having 2 surprises or 3 surprises at the same time. Some are under your control, some are not. But if you can't control the ones that you should know, it does start to damage the relationship and credibility going forward.
Well, trust is the first word that comes to mind. And when you talk about trust, you've got the character and the competency. And I think you're talking about the competency. You're talking about people that would pay back the loan if they could, but competence-wise, they have not made themselves educated enough in their financial situation to be able to competently pay back the loan because of surprises or whatnot.
Yeah, and as well as future decisions. If you're already running in the red and you just want new paint for new equipment, that's probably one of our bigger challenges. When things get tight, if you don't know why they're tight, it's really hard to extend a lot of new dollars for some of those things.
Well, one of the things I'm maybe selfishly hoping to get out of this today is a little bit of credibility, even with my own clients. Is I keep preaching to them that if you come to the table with it's almost like the IRS. If you amend your return before the IRS audits you, you're in much better shape than just getting an audit. And I would say if you come to the bank and say, hey, this is where I see the future going versus them saying it, it's a lot better pill to swallow when your banker's pointing it out versus you pointing it out and working together with them, I think would be the message I would give my clients. Anybody want to jump in on that? Or
yeah, and I think you mentioned it's a lot about relationship too, but if you go back a little bit on the farmers, some farmers think they just want to farm. That's all they want to do is farm, and maybe the spouse is their responsibility, like you said. But if they're in a situation where nobody's comfortable with that situation, that's where I think you said get an expert.
Mm-hmm.
So banks, we have a lot of resources, CPA office too, like you mentioned, for helping them with that cash flow. So then they could come in and, like you said, they come in and say, next year, let's say corn drops to $4.50. Well, everybody in this room knows it's going to be a rough year.
Right.
But if the farmer is still in this mindset of, well, I think I can still make it, and comes to the bank and just asks for their line to be the same or they expect the line to be paid off, there's just not real expectations there. So I think being prepared and being realistic is a huge part when you come to the bank with your request.
The other thing I've found, Jeff, over the years is the larger the operation, the more you have to have more people involved to make sure that you're crossing all the T's and dotting all the I's. And that includes your banker. I found it kind of interesting the other day. I had a new client and they kind of commented about, well, why do you need to know that? And it's interesting to me because my largest clients are telling me everything because they want me to know, because they want me to be able to help them. And I can't be well-versed to help them if I don't know what's going on. So
I've
word
heard
to the
those
new people.
stories before where people are questioning almost the intent of asking for information. And I can promise the audience that the intent is purely to do their job.
Yeah.
I would add to that, in a world now where we deal with a lot of vendor financing, whether it be chemicals or seed or things, the clients that the bank's not mad about it. We understand it. Ideally we would like that credit as well, but we understand the need for it. But keeping that secret isn't helping you. That's part of your financial obligation, whether you're buying equipment through John Deere or Case or whoever that finance, that is a payment. It does come out of your cash flow. It's got to be addressed immediately, even if it's not our debt. I think we've had some customers in the past. They're like, well, that doesn't affect you. So why do you need to know? Well, it affects your financial situation. And if we don't know, we can't help you put a proper cash flow together. So those types of things, keeping it from the bank is usually not a good.
Eventually, the numbers will come out. So it's one of the things that they might have done it, and then 2 years later, you're like, what's this payment going to? Oh, that's just for this. It doesn't matter. Well, you have the farms making that expense, and I think Jeremy said it right too. We'd love to help finance, but we understand there's certain circumstances where there might be 90 days, 0% interest, or something that helps them, and that's just where that trust back and forth between the farmer and the banker is, where we just have open communication. Like Jeremy said, there's no hard feelings on that, but we just need to know when we underwrite that what that expense is, and it's on the balance sheet.
And that wasn't going to be one of my prepared questions, but I think that's a really good point that I wouldn't mind digging into a little deeper is there are all these deals from time to time out there. And anybody can jump in on this, but how do you guys feel about that? Would you rather your client come to you and say, hey, I've got this deal. Is this something you can work with? Or is it, how do you, and I'll start with Michelle, I guess, but how do you foresee that as a good way to handle that? Because I would rather just work with one person personally.
I think it's just a fact of life.
Sure.
And you want farmers who are, or clients, commercial as well, who are managing their margins. So the best way to manage your margin is be looking at all of your costs, and obviously that's part of the picture. However, I do think that you need to be wary of your entire situation and structure things appropriately. And if you're not keeping your bank informed as to all of the situations you're actually working with or dealing with, then they're not going to give you the best advice on how to structure because they don't know what else you have going on. So,
well, and as a CPA, and I believe it or not, there's all these seed contracts out there where they'll basically establish a line of credit to buy their seed. And I bring this example up because it can have a real impact on their tax returns as well. If we don't know about it, it's just like them going to you, borrowing on their line of credit and buying their seed. That's a deductible expense in the year that occurs. And they got locked in their mind that, well, I don't need to deduct that till next year because they're not going to pay for it till next year. No. You borrowed it from the seed company. It is an expense this year. And so we've had to amend some returns and even, turn our head a little bit from time to time because of some transactions like that. So really, I think the message here is, full disclosure with your professional team, whether it's your banker, your lawyer, your accountant, what you're doing so they can understand your full picture.
and I can tell you from looking at clients over the years, I think probably I have the longevity here, unfortunately, or maybe fortunately in lending. And I think that watching clients that start at the same level progress, and you find that the ones who embrace the team concept perhaps have gone farther and continue to go because they're utilizing all of the resources available to them instead of trying to either do it all themselves or do part of it segregated. They're trying to segregate instead of aggregate. And the people that are aggregating are the ones that are actually succeeding.
Yeah, the information out there is just too fast to not collaborate with your team. Anybody else want to chime in on that?
I'll take a little bit more of a bank perspective on this. And I know a lot of the people watching may not understand this side. So when we talk about different financing and different options, vendor financing, whether it's equipment, chemical, seed, sometimes we also call it split financing. If you're getting lines of credit from multiple banks, it's usually not a good sign. You may be thinking you're spreading your business around to multiple customers, but from a bank standpoint, that's usually not a plus. If it's for a piece of equipment, that's fine. But if you're getting a $1 million line from Andy and then coming and asking for $1 million to me, my first question is, why? If that's your relationship, why aren't you just doing it all there? Because from the bank standpoint, we also have the collateral side, and if things did go south, now we have to fight to see who, and it really becomes a very negative feeling. It usually, the times you see it, is people that are scrambling, that maybe they're already behind the 8 ball. Some people, I think, they feel like that's a benefit because they're doing business with multiple parties, but it does muddy the waters quite a bit, and usually is a negative sign.
Well, personally, I'm kind of a relationship person. Even with my bank and my lawyers, I'm willing to pay a little bit more if I feel like I've got a competent person on that team. What are your thoughts? Or I'm trying to figure out how to phrase this question, but because there's very few things farmers can control. I think sometimes cost is one of the few things that they can control, and they might get a little hyper focused on, I got to cut costs. But sometimes I feel like it's to the detriment of a relationship, or they kind of let that overshadow the importance of a solid quality team, whether it's lawyers, accountants, bankers. Anybody want to chime in? Andy?
I'll chime in because I think it goes back to, you said, how do you want that communicated? It goes back to that open relationship. So I'll have a farmer come to me and he might be like, hey, John Deere can do this at 3.99. Well, we might not be able to get 3.99, but if we can get, like, say, within 1%, that 1% might be worth it. Like you said, the convenience, the relationship, say, you know what, to make my payments at one place, to only deal with one banker, that's much easier. That's worth 1% to me compared to that. So sometimes we're not always the lowest, but I think you got to put a little value on the relationship and the expertise that you get from your bank than just a third-party vendor that's in your finance.
Yeah, Michelle, anything on that? Or
It's probably not a popular answer, but I have always said, and I I hate to say this maybe out loud, but I want new clients. Don't get me wrong, I want new clients, but I also want smart clients.
Yeah.
And so if I want them to make moves that are good for them overall, because that just helps both of us. Because the more they grow, the more I can grow. So I guess that's kind of my take on that.
I would add a piece to that. I think we all have the same feeling, the fact that we want long-term clients. So sometimes it is best if they do go, if it's a good deal, they need to take the good deal. But at the same time, if you are always taking your business for the lowest price everywhere, and then things get tough,
Then you're never going to have a relationship.
if you haven't built the
What are you gonna fall
relationship,
back on?
yeah, you can't, don't come back to your banker after you've taken the last 4 deals for lowest price, and then come want a special deal when all of a sudden maybe you're not as strong. I do think there's value. So either you're chasing the lowest price constantly, but understand you do sacrifice maybe some, hate to say favors, that's not really how it works, but if you want credibility when things are tough, you might have to put some credibility in that and value in that on the front end on certain deals. It's not always lowest price. You do have to account for some of it, but you can't, loyalty only goes so far.
Well,
You can't charge
one of
too
the
much.
questions, we put out a poll a couple days ago to kind of get some ideas from the audience, like what would be interested in. One of the top polling questions was, tell me a little bit about how you guys help in a disaster situation. And one of the things that reminded me of just recently, I mean, we've all been through the COVID thing, and as accountants, bankers, I know that you guys took it on the chin, especially with all the COVID money that was out there. But what I noticed from it is that the clients that I had that had solid banking relationships when nobody knew what was going on and nobody knew how to apply for these loans and nobody knew anything, the first people in line at your banks were the people of your long-term clients. Talk a little bit about, what you guys experienced, and I'll start here with Michelle and work down the table in terms of your experience with COVID, which I would equate to a natural disaster similar to, drought, flood, etc.
I guess when the biggest thing that came out of the PPP that was the PPP, out of COVID, and basically what our approach to that as a bank was obviously, my approach individually, I guess, and as a bank as a whole, but my biggest thing was I wanted to make sure my clients knew what was available to them, and then I wanted to be prepared to be able to get them if they determined that was something that they wanted to achieve. I wanted to be able to get that moved forward for them quickly. And then we also knew there were also banks in the community that weren't able to handle the product for them. And since we knew that those people were also farming and qualifying for certain things or commercially involved, we reached out to those clients as well to help them kind of move that through, not with an expectation of getting a new account. Obviously, that would be great. We're trying to
Sure.
give you a service, but by and large, we wanted to help our community. And so we just reached out to everybody we could and worked a lot of 7-day weeks.
Well, and now that you mentioned, I remember that we had a couple of clients that I'm just going to say may not have had such great relationships, and I believe you helped out a couple of them.
Yes,
So
several.
that's a great example. And I think, not putting words in anybody's mouth, but when you talk about tough times or natural disasters or things like COVID, we just kind of hit on that. Who are your relationships with? Who are you gonna shoulder up with when it gets tough?
Well, and who's looking out for you?
Exactly.
And that's our point. So we've had some clients that have moved some business over to us, and they said the thing that kind of got me was that my bank didn't even have a clue. And then some of them, that their bank was doing it, like they didn't even reach out to them. And so they were like, well, where do I fall in their pecking order? And like, I'm a nobody to you, but you've reached out to us. So, and our whole goal was help the community. So hopefully that made a difference in some of the areas that we're in.
Jeremy, what was your experience with COVID?
Yeah, I said, so we started, obviously the smallest bank in the group. We probably had the most challenges in terms of work staff to handle it. So our initial response when it first came out was, it's too complicated. This isn't something we want to do. We don't know what we don't know. And after about a week, we found out that, we started getting requests from our customers, and we revisited it very quickly and said, hey, if we want a relationship, we do have to provide this service. We have to get up to speed and figure it out.
Or finding a
Yes,
resource.
and find a resource.
Yeah.
So originally our response was, I don't know if we're capable of handling that. Had a staff that basically said, well, we have to do this. This is important for our community, just like Michelle said. So we picked up the ball. It was some long hours, and then because most of our farmers are what they call lifestyle farmers or hobby farmers, didn't realize what they were capable of. So we did. We reached out to all of them, and you talk about strengthening a relationship. When you can find free money for people, you kind of become the hero of the day. And as long as it's not a lot of work on their part, we shouldered a lot of the long hours to make it happen. But we had the same response. We didn't know if it's something we wanted to do, and found out very quickly it's a need, and it is a relationship building thing that. So we did. We found it was a very, very positive thing for our customer base.
And relationship obviously is a key theme here, but I think it goes back to even customers that might have even been with bigger banks or larger institutions. They called and they were just put on hold. They just spun around. I bet you all the lenders at our banks, our customers have our cell phone number. They call us. They know where we live. We know where our banking center's at. Like they have the ability to actually communicate with us, and we communicate with them during crisis, where they're not sent to a 1-800 number or get in queue and just kind of spins around. So I think helping them through that process, not only getting the funds, but also the forgiveness process too, is being there from the start to finish. We didn't just give them the funds and say, we'll just figure this out. No, we walked them through that process. We got them submitted. At least in most of the situations, send an email, letters of, hey, it's forgiven. You're a clean slate. Because I think there's a lot of uncertainty still with customers saying, is this really going to happen? And there's a lot of detail.
Too good to be true.
Yeah, like I don't understand. You're saying this is a loan. Well, it's a loan, and then people call, well, I don't want the loan. Well, you have to get the loan for you to this. So it's a lot of education too for our customers, because there was a lot of confusion in the news,
Right.
And you hear different headlines or different articles that were kind of all over the place. And I think that's what makes a local bank a little different, where you have that contact, you can get it straight from them. And there was circumstances when it started where we didn't know what was going on, because we were getting stuff from the SBA and the government that didn't make sense to match up. So there was a lot of just piecing that together and realizing it was definitely a need that our community needed.
Yeah, I think the biggest takeaway that I took from COVID was, and whether it was the 2008 financial crisis or COVID or recession, is when the chips are down, who's in your corner? And if you haven't been developing that up to that point, then you're too late when stuff happens. And so that just re-emphasized my principle of strong relationships all the time, because, it's just, even when things go bad in your personal life, you want, good friends, strong family, so they can help you get through those tough times. And I think that's what you get with, what we've got here is basically I call relationship bankers. These people that we have in front of you today are not, they're not doing it by the numbers. They're doing it by the individual, and they care about you as individuals.
So along those lines, Jeff, and I kind of digress from your current topic, but
That's okay.
if you're a commercial borrower listening to this right now and you've gotten a letter that says, hey, I qualify for ERC money, and you've gotten somebody saying, I'm going to get you set up on ERC money, be very careful with that and reach out to your CPA and make sure that this is actually going to be something that you end up qualifying for, because I'm fearful from what I'm hearing from numerous accountants that we work with that a lot of people are getting bamboozled into thinking this is another government free program, and it's not going to be, because you're going to end up not qualifying the way that you need to qualify to get it the way you think it's going to work. So
I would double down on what Michelle did. And I've got an actual real life story that just, I don't know if it's heartbreaking, but a client of ours was enticed to take a employee retention credit in the tune of $600,000 with a 25% commission. They paid somebody $150,000 to get a credit that they did not qualify for. And so now they're playing audit roulette. And when you're talking about, $600,000 in penalties and interest, that's a business sinking type mistake. And so these ERC things that you hear in ads and everything, if you haven't been contacted by now, you probably don't qualify, but certainly contact your relationship, whether it's your banker, your lawyer, your accountant, somebody that you trust that knows what they're doing, that can give you an objective opinion. We've had several questions about that and skeptical of whether they qualify or not, because they've been sold very well that they do. So be skeptical at this point, because right now you've got the vultures out looking for their, 25% on your money. So anyway, that was a little off topic.
I'm sorry.
A very,
Had to throw that out there.
a very
Really topic.
appropriate throw-in. Let me get back on topic. One of the questions I had lined up today, because I think it's kind of a confusing thing. Jeremy, I think it's your turn to start here. So talk a little bit about whether you're a continuing relationship or a new relationship. What do you expect from a collateral standpoint? Whether it's percentages or setup, kind of give your different take on, how that can help secure the credit and give a good feeling with the bank, the board, the committees, et cetera.
I think the first thing we need to address in terms of collateral is there are different types of collateral that have different values for different banks. Our bank, we are really pretty comfortable with farm ground. No, farm ground is not going anywhere. It's easy to market. I hear the horror stories of the 80s, but I don't think we're getting back there. We have too many investors involved. Farm ground is traditionally an appreciating asset where your machinery is depreciating. So we value farm ground more than equipment. Now percentages, it changes based on relationships, but for the most part, most commercial places are at least 20, they only go 75% of the value. Now, we make some exceptions on occasion, depending on the client.
So on $1 million farm, you'll live in $750.
For the most part, we're pretty comfortable with that, and that doesn't have to be cash. You can throw in other collateral as well.
Uh-huh.
But I think as a society, we've gotten used to going to the car lot and getting 100% financing plus taxes, title, and a free tank of gas to drive off the lot. That's not how it works in the commercial world or the ag world. So you do have to have, especially for first-time farmers that are trying to get into farming, it's a very, very difficult industry because it requires a lot of capital to start with, and you need some help. So there are some government programs that can help with that, but for the most part, 75% is the most we're really looking at for most of that collateral, and it should be market value, not necessarily what you paid for it. It's not always, if you're going to pay $25,000 an acre for ground, don't assume that your bank is going to assume that ground is also worth $25,000 because that's what you paid for it.
Andy, is that same for where you're at? And maybe you could talk a little bit about how, if there's any differences and if you're taking commodities as a collateral?
Yeah, so I think on the farmland, everybody's pretty similar, and you kind of have a little give or take leeway too, based on once it goes back to relationships. Stronger farmer might be able to make more sense to do, might be up against some competition, so there's some availability on that. When we look at from the crop side, most of those are usually tied to the line of credit. So usually I'm looking at the receivables coming in, the grain that's stored. Usually from that side, even if you have crop insurance, a lot of farmers have crop insurance, we can go even higher. So like you might say, okay, we'll do this X% on your crops, but guess what? If you have crop insurance, we'll go up to your crop insurance amount. So we could get up to 70, 80, 85% on some of those lines. That kind of makes us feel more comfortable from that standpoint. Some of our farms, they have their free and clear equipment might be tied to the line. So we file a UCC on some of their equipment that's not tied to it, the term loan. So I guess that kind of goes back, and I know we'll probably talk about later just about line of credits, but just making sure you use a line of credit for what a line of credit's meant to be, for your expenses, not for a tractor you're buying, a trailer. Make sure you're getting those termed out because it's going to stay stagnant on your line, and you're expected to kind of clear that out with your crops coming in when you sell those. And if that tractor just sits on there, the banker's going to call and say, one, what's going on? Hopefully, once again, open communication. We know you bought a tractor, you either financed or we did a term loan for you, but you just don't want to get to your renewal time where you sold all your crops and they're still 80% maxed out in your line and you're sitting there scratching your head going, what happened here?
I think you bring up a good point that unfortunately I had not pre-planned to touch on, but I want to, and that is that I don't think a lot of my clients understand why their banker wants them to zero out their line of credit. And I think the reason they don't understand it is because they don't use it for the purposes it was designed for, which is it's temporary cash flow issues, not permanent borrowings. And so with what Andy said in terms of they don't want you borrowing for a tractor because that's more of a 5-year to 7-year asset. You're supposed to roll out of that line of credit every year because it's hopefully help you pay for your inputs or help you market your grain more effectively, but not to buy the wife a new caddy or to buy a new piece of equipment. So, Michelle, last but not least, what about collateral for you? Any differences between the gentlemen?
Again, wide variety. We use several vendors for real estate, so a wide variety of down payment money expectation. As far as the lines of credit, though, I actually have some clients that's the only way they buy equipment is on their line of credit. I have some that buy farms on their line of credit. So if it's ours is more, our philosophy is more based on what is your game plan. Like if you're buying a farm and you're on a 2-year line of credit, you're going to have that farm paid off by the time the line matures. I don't really care what you use it for. So it varies a lot depending on the overall client and the relationship. And again, back to the communication, we have to know, obviously that's going to be a strong client. That's going to be somebody that you've worked with before, that you have the confidence that what they say they're going to do is what's going to actually happen. So I don't know if that helps answer your question.
Well, it kind of reminds me how I manage my children. When they show me that they've got the competence and give me trust in their decision making, I give them a little bit more leeway than the one that's constantly can't communicate because their cell phone's dead or doesn't check in regularly. So,
exactly.
It's really about communication and establishing that trust and being very intentional about your behaviors in order to keep that trust alive. Because at least I think we all would agree that trust is probably one of the most important qualities in any relationship. And so whether it's business or personal.
Yeah, and back to trust. It's the foundation of banking. Our entire financial system is built on trust. So if you can trust your customer and they're upfront and honest, they do get a lot more leeway. And if they know that's what the intention of the financing is, you have a lot more comfort with them to see it through and that it's going to get paid for.
Well, and again, I just want to emphasize trust has got two components. You can be as honest as the day is long, but if you're not competent in what you're doing, then you still don't have that full trust. And so whether that's getting your banker or your accountant involved, you've got to have both in order to have that trusting relationship, both the character and the competence. So anybody else on that one?
It just leads you back to the cash flow though, Jeff.
It really does. I mean, and we've really, in the last probably couple of years, just started to push our clients into not just doing the cash flow with us if they can't do it by themselves, but also monitoring it throughout the year and saying, okay, this is what I expected. Now what happened? Do I need to change my plan? Do I need to change my goals? I mean, we just had a client this year that we're like, okay, our goal is to get $50,000 off your line of credit. We want to put $50,000 towards this piece of equipment that we know we're going to buy in 2 years, and we're going to set that aside. And so we keep him focused on those goals so he doesn't, the next shiny object that flashes in front of him, like, oh, I could use a new tractor. No, this is what we want right here. So I think it really keeps you focused to have that consistent contact with where you're at and where you want to go.
I would add one piece to that. I know we talk a lot about cash flow, and for the most part, for the people listening, we're talking about forward projections of what is going to happen for the next year. I encourage each of them to also look back and say, how close did your actual, your numbers actually come up to what you thought was going to happen? A lot of times that plan is to put $50,000 on that term and pay off 2 extra payments on some equipment. If the reality is, you thought we were going to have $7 corn and it was $4.50, you should know how much that actually costs you and why you can't get there. Mm-hmm. I think too often we're eternally optimistic about the farm economy. Grain's always going up and inputs are going down, which is not really the case. So kind of at the end of every year, look and say, how close were you to your projections? It helps set your cash flow for next year as well.
All right. We've got about 10 minutes left. I want to make sure I get to a couple questions that I know was important on our poll. One of them was, and I think we're back to you to start, but it doesn't matter at this point. But anyway, it's not a secret. We've been in a higher risk interest rate environment than we have for a long time. One of the questions that we put out there that got high marks was, what can we do as clients to help mitigate some of those higher interest rates? What can we do to make that better?
If you're, I guess, to one point is, if you're coming in wanting the best interest rate at the bank, you better have number one, you have to have good collateral, and you better understand what your business looks like.
Similar to
the
what
rates
we've already talked about.
we already talked about. If you come in and you want an A+ deal and you're bringing a C- credit to the bank, you got to have some realistic things there. So if you can demonstrate what you're doing and how you can pay down, that'll at least help your case. The markets are the markets. We don't get to control. None of us here sit on the Fed and get to set interest rate and overnight funds. So as markets go up, everything, we do have to adjust to it. Rates are higher. And if you are expecting a decrease in rate, sometimes you might have to offer up some more collateral or something of that case. There's only so much you can do with the credit. We're not going back to 3.5% lines of credit anytime soon. So again, being realistic about what it is, and controlling some of the other expenses. And one of those is interest, but it does usually come with some give and take as well.
So what I heard is similar to what we've already talked about is that, good books and records, know your numbers, give us confidence.
Mm-hmm.
Then if there is some flexibility that you'll be on the lower end of that scale versus, not really sure where you're at, not really, you're going to get a little higher cost because I may have to write some of it off someday.
Correct.
And you want to go?
Yeah, I think on the interest rate side, I mean, obviously, if they're not getting down to 3.5 anytime soon, I think some of that's and I'm sure you're alerted every time there's an increase, but I think last year some of our farmers were caught off guard when they did the renewal and they had to pay that interest because they're used to paying, they might have, even their cash flow, they might have projected a 4% interest payment and it jumped to 8%. So I think a lot of that's just kind of having a good understanding of your cash flow and also just using your resources. One of the notes I had here, I was going to end with it too, is just being open and honest with your banker. Just say, hey, I'm struggling with this. What can you do? And like Jeremy said, there might be options where if you want, we can find some other collateral piece, make the deal stronger. We can work with you on that. The other thing from the interest rate standpoint is just making sure you're using your line the way you should. And what I mean by that too is if you have a receivable come in, make sure the bank, we like interest, but we want to make sure you're successful too. Apply that to the line right away. Because I think some farmers get to the balance where they're like, well, I'm going to use that, but it's kind of just a mix and match. The more you pay down, the less interest you're paying. Even if it's just a couple days, you can always borrow that back with the line. It's an open and revolving line. So as bankers, yes, interest is how we make our income, but we want you, if you're looking for ways, it might be as simple as just applying more to principal and just borrowing it back.
Two things. Number one, I was talking to one of my clients the other day who's an older client and not that old, but older than me anyhow. And he said, historically speaking, when I quoted him a rate, he said, this is not a bad rate. And so keep in mind perspective, what historically rates have done. They're going to go up, they're going to come down. Keep that in mind. Number two, don't get complacent when rates are cheap and not be watching your margin, watching your profit margin. There are other places to cut costs besides your bank interest rate, even though that might be what your first choice might be.
Right.
And then finally, the other thing is don't get yourself set on this is how I achieve this rate or achieve my goal of even purchasing equipment. I have people that come in and they say, oh, I want to do a 3-year loan. I want to do a 3-year loan on that piece of equipment. And I say, no, you don't want to do a 5-year loan because that's cheaper interest rate right now. So we're in a different rate environment right now with the inverted rates. Don't get yourself stuck on this is how I have to achieve my goal. Some people have borrowed money for their line of credit on a farm. So they're operating out of cash, sort of. They've borrowed money against the farm because the farm's cheaper money. So kind of don't get yourself set on this is how I have to do something before you get to the gate to do it.
So what you're saying, what I hear you saying is there's some creativity that can take place, especially if you have a banker that has that creativity, experience or capital. Like there's different ways to skin the cat.
Exactly. Yep.
Yeah. And I would add, especially what Michelle said, we really look at 3 different ways. You have term rates at different stuff. So just because maybe you got a better rate on a farm or maybe it's an equipment this month. So sometimes you have to, just because you've operated out of line of credit all the time, right now that's your most expensive money. So you might want to term some stuff up and then recapitalize your operation. Might be the cheapest interest rate you can get. And 2 years from now, we might be in a different environment. And then you reevaluate it. That's where the relationship and the trust between both parties has to come in.
Yeah. it just so much reminds me of when gas prices spiked so quickly a few years ago and nobody could adjust quick enough. And it's almost the same thing. I mean, we went from 3.5% to 8% within a 12 to 15 month time frame. That's not a lot of adjustment time. And so I think, again, the message to our audience today would be, if you're not looking into the future to see what's coming, you're going to get an unpleasant surprise, either by me or these bankers are going to tell you that your interest went from 40,000 to 80,000 one year, and that's going to really hurt your financial goals for that year. You're going to have to readjust. And like Jeremy said, I don't think this stuff will be here forever, but for the current term, this is what we got to work with. I'm going to ask a little bit of a self-serving question here because we are very adamant about turning tax returns around in a timely manner. So often we get clients that come to us and say, I'm leaving my CPA because, I always get my return on the day it's due, or they've always extended it. Talk a little bit, and I think it's your turn, how important it is to get tax returns done in a timely manner.
Well, as we said, we usually use that 12/31 balance sheet, but once again, the tax returns just reinforce those numbers. So a lot of on the ag side, we're doing our renewals in January, February, March. Well, people aren't getting their taxes done. So until we get that tax return, and we had mentioned that there seemed to be a lot of farmers this year that when we did the renewal is, well, it's on an extension. I'll have it next month. I'll have it by May. And some of them are being pushed out even until June now. So I think those farmers and as bankers too, we want to see those hard, solid numbers on paper. And that's to get the balance sheet. But yeah, it seems to be this year seems to be a lot more extensions than I've seen in the past.
Anyone else? Same comment?
Well, same comment. And just because we don't have a final tax return, one thing we've asked some of our customers, if you meet with your accountant, some people do some planning in November, December, bring what you can to the bank when you set up your stuff. Just because it's not, filed doesn't mean it doesn't have value to the bank, because at least then we get a little bit of an idea as we're putting together your loan presentation for the year, because most of ours do have to happen prior to an actual tax return being filed. But there's usually some preliminary work for most of our people that know what's going on in their operation. It just adds credibility, and then we can also see it and help. Even if we don't have the final, we need at least that pre-planning conversation.
And some have multiple entities, so I understand this might be done, but they're not final until this. So we've seen some where the CPA will send it and it just says draft on it. And that's pretty good, and especially when we get that trend, we can kind of have that trust with the CPA business, okay, this is the draft every year, and it almost matches when they file. So we can kind of start to trust that draft a little bit more if there is a delay or an extension.
Well, I try to tell my clients, if we're not getting your tax return done on time, they either think your books are bad or we're not doing our job. So, it becomes, again, another small detail of trust between your team and your relationships. Anything different, Michelle?
No, just other than the bank's getting audited too on whether those returns are filed. So, and if you want to keep your banker happy so you're not on their audit list and they're not getting written up for you not getting them turned in, you want to get them done in time also.
Last thing you want, the last minute call is say, auditors are coming, do you have a tax return? Hold on.
And again, back to a trust thing, if you can be proactive, even if you get your line closed 1st of March and you don't get your taxes, till middle of April, send them in. We still have to have them. Don't, the 3rd or 4th call trying to
sound pretty past the rest of the year.
Yeah, don't wait till next year to give us last year's taxes.
And the other
It's not helpful.
Yeah, the other thing too that I was going to say, I forgot that was going to be a topic. A lot of times we have people who are moving very fast in their business, and I have one guy in particular right now that's growing pretty quickly, and he's got requests almost every week. And the way I can serve him better and serve my client better is if I have the return already in file. And so at the point that he hits it, I get it right away. That way it's already been updated. There's no questions from the approval boards, from the auditors, from anybody, because it's already in file and we keep rolling on. So the way to keep your business in a position to do that is to get all your stuff done in a timely fashion.
And Jeremy mentioned as a board member when you're making that decision, if we come to you and say, here's 21's tax returns, you make a decision for this year.
And for 23, it's a big red mark. And I would say just as ease, I think we're past the days of bringing in 75 pages and having to scan them on a copier. From a bank standpoint, we like them electronic if we can. Mm-hmm. It just makes it a lot easier for our systems.
Sure, of course. All right, we are unfortunately about out of time, so I'm just going to conclude with a few remarks and let you guys follow it up. But what I take away from today is really knowing your numbers. Don't minimize the relationships and how important that can be, especially when times get tough. First thing, I want to thank you all for joining us today. Really appreciate you taking time out of your day to help us put this on and share that information with our audience. But go ahead and close up, Michelle, what your takeaways were.
I think you're right. Be prepared. Make sure you're coming to us with a plan, preferably with a plan with numbers behind it, not just a verbal plan or a written plan with no numbers. It's good to have that thought process, but if you're expecting answers, we have to be able to move forward with numbers. And then don't undersell your community banks, because we're in your community. We see what you're doing. Hopefully you're seeing us, and you're going to get your best resource out of somebody who's willing to go to bat for you.
Yep.
I would add to that, the time to build a relationship is not during the tough times.
Yeah.
Put the time and effort in before you get to needing that special request. I know it's not always seems the easiest way, but if you really want to have a relationship, you have to put the time in when times are easy as well as when they're hard. And yeah, we're all in the community. Everyone here wants a long-term relationship with customers. We're not trying to sell something one day and sell it to somebody else the next day. It is meant to be long-term relationships, and that's what community banks are founded on, and that's why we're still here.
Michelle said it great on the community banks. We know when it rains a lot. We know when your field's flooded. We know your soil types. It's just that local feel you have where we're in the same boat with you. So I think my biggest takeaway is just to share is don't be afraid or intimidated by your banker. If you have bad news, it's going to get to the banker eventually. Just be open and honest, get to them up front, and just have an open communication. And your banker will tell you sometimes, hey, these numbers don't make sense. Well, we're trying to put you in the best position for you to financially succeed. So sometimes people get a little offended if the bank says this doesn't make sense, but hopefully the bankers explained it why it doesn't make sense and helps them understand that this long term is not the solution to your problem. It's really this.
All right. We're a little over on time, but thank you guys very much for coming in today. And we're going to go ahead and sign off. And thank you for all the audience that hung in there for the full hour today. I hope you can learn something.